Good day, YouTube. It's your girl Lisa Mono Victress, and today I am going to go over certain things that have started to piss me off, and so I'm going to teach y'all or show you the difference of different strategies to something specific, which I'm about to mention. But I'm also going to show you why I, in my personal trading style, like to use validation as a terms to take a trade. And that's why, like, my first lesson, right, that I did that I posted here from Twitter, I talk about there's two main things in the market in terms of reversal or continuation. And the reason why I say that is because I don't like to be attached to always trying to catch one or the other. So I'm going to go back and talk about the history with that a little bit in reference to turtle soups, which I'm about to go over. And then we're going to go over my frustration because y'all done went and pissed me off. Okay. So here's the thing, right? People will pick a model and trade only that, which is fine, by the way, but they want everything that they see in the market that has potential for that to work every single time. Nothing works 100% of the time. Even things that work, they don't work 100% of the times. So if you understand that one invalidating is just simply a different play and you're able to be flexible and take one as a reversal and take a confirmed pattern as a reversal or fell one as a continuation or vice versa, if you trade continuation patterns, then you'll be able to have more opportunities to trade in the market. So I'm not saying that you have to trade more than one setup. You can have one that you just is your thing. But even with that, you need to see like best trade management that you can do with that strategy and go from there. So the reason why this kind of came to mind is like constantly when I'm teaching, I get questions all the times about why didn't this work? Why didn't this work? And a lot of times the reason is that simply it was meant for something else, but they wanted it to be this. Like in particular, a lot of students are obsessed with reversals and want everything specifically with like liquidity being purged or whatnot. It's like, oh, it has to reverse now. It doesn't have to reverse. Sometimes the manipulation is just a pullback to continue. And since because you think everything has to reverse, you're caught in those trades losing. And then, but then you validate the times when it works and you're like, see, it works. I just messed up. But if you could learn the flexibility of validating when something is playing versus when it's not, that would be helpful. So we're going to talk about turtle soups and whatnot. Okay. So I'm not going to break down the whole entire strategy. If you want to do that, there's a trillion people who sell it. Okay. I am going to talk about the history though of it a little bit. Okay. So originally Richard Dennis traded in, I think he was born in 1950s. He traded in the 1970s, right? He started on the floor and ended up trading his own account eventually to like multi-millions, had his own firm in time. And he did a competition with another trader to teach those traders how to trade that were newer. And his style was continuation. He was a trend trader. So in short, he was basically trading continuations. If he's a trend trader, he keeps stacking on in a bullish market, stacking on a bearish market. So he's not trying to catch reversals as much as continuations, right? Linda Roschke, another very successful trader, she's the one who originally came up with turtle soups, was basically was once equal highs or equal lows are liquidated, that the market reverses and doesn't continue to trend even with previous momentum. So she is gonna like if you want to learn the difference between the two, obviously you can go study their own strategies or what information is there, which is why I went over it first to go over the differences. But that's also why hers is called turtle soup because those trend traders are getting liquidated, souped. They're getting liquidated whenever those highs are taken. And instead of being a breakout for a continuation, she's catching those breakouts and reversals instead. Okay. So, but as you see, even just from their history and us knowing who they are and how successful they've been, clearly both strategies works, right? Is one really better than the other when both strategies are working? Who's to say, right? Nonetheless, people are obsessed with turtle soups right now. So I had someone that was asking me about like, why didn't this trade work? And then it's like, you just have to explain to someone, it's like, you're wanting every single trade that has equal highs to reverse. And when I talk about that, I'd like to see trades have liquidity taken. It doesn't mean that it has to be for reversal. I just want to specify over and over again that Just because liquidity is there to be taken doesn't mean it's being used for reversal. It can also be used for continuations. So in these examples here, I'm showing ones that worked and ones that didn't. And if you try to trade every single one of these as only one thing, then you're going to lose 50% of the time. If you're able to take these trades here and wait for validation, or have more reason to take the trade than just simply liquidity has been taken and now I wanted to see it do this, then you're going to have a better chance of trading that successfully. Okay, so I did them all in the same time frame. The check marks are ones that are turtle soups that worked. The X's are ones that didn't. Now these are not, the X's don't mean that these aren't trades that you can't take. I'm just showing you that these, the ones with X's are basically continuation trades, whereas the ones with checks are ones that reverse. So technically I'm doing ones that I confirm turtle soups and ones, and the X's are ones that are not. But again, that doesn't mean they're not valid trade setups. It just means that they're not turtle soups, right? So these equal lows were liquidated. It eventually reversed and was bullish, right? If its low is liquidated, you're looking for a buy side reversal. If its high is liquidated, you're looking for a sell side reversal. This one, it was taken on both sides and had a move on both. And this one was used for continuation, right? Which is another point to be made, by the way. Even in continuations, there's reversals in continuation patterns. And if you're actually trying to buy low and sell high, then you're actually technically trading reversals in continuations. Mind blown, I know. Nonetheless, these are confirmed turtle soups that ended up playing out because once these equal lows were liquidated, it eventually came back at this price and bought up. Once these highs were liquidated, we came underneath here and rejected for that sell. For me, well, actually, you know what? I'm going to go back to how I validate trades in a minute. Let's just look at this example here, right? And so this would be an example of where turtle soup people took this trade, thought they was hot shit, and then got completely liquidated. And I almost guarantee you that every single bullish candle that happened here, they kept trying to buy and kept getting liquidated. So this was a continuation model that would have not worked for a turtle soup, but would have absolutely worked for a continuation trade. This one actually is based off these equal highs. And if you look at it over here, it did not reverse for a sell. It actually continued to reject off here and finished out a buy. So this is a continuation one, a failed turtle soup. This is equal lows I was taken, confirmed, and did a reversal, a bullish turtle soup. All right, let's zoom out for these two, or for these few. Okay. Here's equal highs here that were taken, and it did reverse, and obviously did this really nice sell. These equal lows, you can kind of look at all these together, right? All these equal lows here. Similar to the other one that kind of happened, it initially did a little bit of a buy, but then as you see, traded to the other side and actually ended up being continuation, as you can see, right? All these here. And if anything, honestly, if you're able to eventually, like after I go over these, I'm going to show you what I look for validation, regardless whether it's a reversal continuation. But if you were actually able to catch both of these, you would have caught stupid good trade on this, trading them together. So there's that. Okay, this one here, equal highs, liquidated, nice little reversal, equal highs, liquidated, reversal, cool. These equal highs here, higher time frame. There's actually more equal highs here, right? So there's 3 equal highs. Once it's taken, it gets a little bit of a move, but as you see, it fails and then continues to buy here. Finish pushing out that move. This is probably one of the cleanest continuation ones of a complete failed turtle soup, but a beautiful continuation move to the upside. Okay, so I don't want to do a trillion examples, but obviously I wanted to show about 50-50 of like ones that worked and ones that didn't. So remember, with confirmation bias, you tend to find what you're looking for. So if you only look at one model, that's okay again, but just understand that when you trade that model, you need to be really good at validating when it's a proper execution of that model versus when it's not playing out. We need to potentially exit the trade or just not take the trade. Even better if it's not validating at all. So what do I look for? Since I look for validation of the move, I'm looking for additional factors beyond just liquidity being taken. I look and side of like higher time frame trends to see if it's trading in line with it and whatnot. But specifically at the price where those equal highs are, if you look at the reversal ones, you'll see once it confirms that it rejects with strong price action at that price and the direction that you're wanting it to go. All right, so if this is a potential bearish turtle soup, you see when it comes back to this price, look at that momentum and volume that it rejects with. You see that? This is a confirmation for a valid trade that you can take. This one also, I already went through in another class about how I look for previous highs to be respected and for it to continue. Right now, I'm just going to look at that straight price action rejection here, right? Buys are put in, this little bit of a supply gives a little bit of a pullback at this price, but then more liquidity is taken. This actually does a little bit equal lows here and does another small time frame turtle soup. And then once it checks, you can either get in here or once it pulls back here, you see how it rejects at that price. This would be a valid confirmation for me as well. So a lot of the valid confirmations for the turtle soups will either be a really nice engulfing candle or will be some type of hammer candle as well, like pin bar candle or hammer candle. Now, obviously, the smaller the time frame, the better your reaction is going to be. For the sake of simplicity, I'm keeping this in the daily time frame because that's what I'm showing it to you on. But once you have those lines marked, you want to get on a small time frame and get a better entry. Or I might go back and look at 1 or 2 for right now, but at this moment, I just want to show you kind of what I'm looking for. So these equal lows, once they're taken, you see how at first when it comes here, it actually respects lower. This would be an example of it potentially felling. But even this low here, although it cleared this low, it never respected to go lower, and it struggles here and comes back to this price. Once it rejects with decent volume here, this is definitely a candle you can get in on, and then have your stop past this previous low and let it play out at least that previous high and potentially higher. But you see how there tends to be pretty decent reactions at those candles when it's valid at that price where that liquidity was taken. All right, so this one does initially, let me send this. This one does have a good reaction here, but also just like I showed in the other one, you see how it fails it doesn't even clear the previous high on this time frame. The previous high is here, it doesn't clear it at all. If anything, it just trades and uses this as a supply and then trades lower. So since this is a daily time frame, even if you were to get in on this, once it's coming back down to this price, this volume did not confirm the trade at all, and it's definitely not valid. Once you continue this line over, you see how it pulled back up and then respected to the bottom side and pushed down. You see how it cleared this low? That's a good candle to get in on. And you see how it respected it. So this would actually be a safer entry. If you're worried about this one, you would, and you could have it as a zone, right? Because it could have potentially traced in this zone, but as long as it either respects this low or trades underneath this line and rejects, then that's a good trade to get in on. All right, so I'm letting it tell me when to get in instead of deciding what it's going to do. So novice or newer traders think that they predict what the market's going to do, and when they're right, it's because their prediction was correct instead of just reacting. The best traders that I know simply state that they react to what the market is giving them, which is what I do as well. It's not that you can't predict, but understand with predicting, you're still guessing, and when you're right, it's not because you are the Messiah and everything happened as you said. It just, you got a lucky guess and it continued. Okay. The quicker you understand that technically what we're doing is, dang, I just forgot the word I was looking for. Speculating. Technically traders are speculators, right? So, and all say all is we're speculating. And so we just have to play smart and follow proper risk in that. All right, this one's a little bit cleaner for the continuation because every single time that it sold back down, the lack of volume is really there. This one is a decent candle, but as you see, it struggles almost immediately. None of these lows were ever cleared that come inside of this resistance, and then it continues to struggle. This is actually one where I probably would have entered the trade here. This is the daily time frame. This is still 3 days of trading. But once it clears these highs, when it doesn't respect these highs, which you see happens the first day it opens back up, that tells me it's coming back to this price. I don't need for it to come knock out my stop loss for me to see that the trade's not validating yet. And I'm okay with market coming back to the current price, because if it changes the validation to be reversal, then I would have taken that. If it comes back and shows that it's going to do a buy side move, then I'll take that, right? So technically when it rejects here, it rejects to the downside. This is a 2-day trade. This one does clear these lows. These lows are cleared, but as you see, it doesn't respect. You would be looking for it in here. Here, it doesn't respect at all and isn't great. If anything, it would have been better for you to see it clear and see if it rejects here. And then if it does, then you get in. If it doesn't, then you're not even in that trade. So we have the buy side one here. This one ends up using this as a demand and pushes up. See, this is better price action. You see, that's why I want you to start paying attention. When you study these and practice these, start paying attention to those larger candles, the ones that have volume supporting the move. Those are way better. This one clears this high. It comes back and respects this high. And that would be, if you miss this entry, that's the one for me right here. I meant to do whatever. You get the point. That line, and then that would be even better entry. And once these highs are cleared, then you can use that zone for the next one. All right, you see that? There you go. All right. I don't want this to be too long-winded. I think I've already technically made my point. This candle breaks through here. It doesn't even have another bearish candle. It immediately just stays there and comes back to this price. Once it's at this price, this is exactly, again, a nice high volume engulfing candle. This is a valid reaction. And then it clears these highs. Once it clears them, you see how it respects. It respects. That's another entry for me. Continues. All right. My moves are looking for validation, not for me thinking, oh, this has to do this and making it do that. Follow what price action is telling you. It's always reflecting DOM, even though price action is a little bit later than depth of market, it's still there. All right, for this one here, it did initially give a little bit of a reversal. If you have one that gives you a little bit of a trend line, definitely try to use it, because that'll help you. And I don't care what anybody says about them not working. Everything works based off your application. It doesn't work based off your application. So don't add me in the comments about trend lines. I don't have time to listen to your crap. That's the type of mood I'm in today, because I'm sick and tired of hearing whatever does and doesn't work. And even with me telling you like my opinion on this stuff, I'm still expressing my opinion on things. So I'm not, even things that like that I'm not in favorable of, I'll still say that it can work. Just I'm trying to give feedback at things that I think will help people. I'm being a little bit more to the point today, but sometimes I think it's needed. So yeah. All right. If you took this trade here, it does clear this high here. And this is what, 3 or 4 days of buying. So that's fine. You can definitely buy here, but you want to see it clear that higher time frame high. I don't need to even draw a line. You can tell it doesn't clear it. And then once it pulls back here, if it's not able to buy anywhere in this zone, then it's a no-go, right? So clearly doesn't. And if anything, if you're looking at the price action, which is what I just mentioned, this is clearly showing that sales are being put in, right? This is a nice high volume engulfing candle that gives me more bias to the sell side. This is one more attempted. This is where people be like, see, it doesn't, see, they don't work. But it still came underneath and rejected here. Fake outs happen in support resistance and in trend lines. Trend lines are just SNRs at an angle. Nonetheless, this is clearly a beautiful trade here, and it does continue to validate some of these lows and continue. Even when it buys back up, once these lows aren't respected and it's coming back to this price, I don't need to lose all this profit before I either just take these wins and let it come back here before I understand that it's likely coming back to this price. Oops. Hold on. Then eventually we get those beautiful rejections, especially at that price, right? Like I said, candles, pin bars, those rejection candles. There you go. And then these also fall in line simply with that trend line. And then again, look at that volume, right? That's what we're looking for. So anyways, this is a continuation model that played out. All right, the reversal one. This one looked like it was going to be a continuation one. And to be honest, you could have taken a continuation one before the sell one, because this is still 3 days of buying. And this is actually a really clean rejection to the same way that this one right here had an extremely clean rejection to that top side. This one actually did the first time. And you can actually take this trade. This is still a beautiful trade here, even for the continuation. It's just higher time frame. You know, like week and over was a reversal, but you definitely still could have taken this as a continuation because it does have a nice rejection, decent volume. But once this high here is not respected and it ranges here for all this time and it keeps struggling to respect this like over and over and over again, I'm not going to be consolidating. Let's see, this is from what? May 18th till June 4th. Yeah, this is like a month of consolidating. Okay. We not doing that. Okay. Especially when this line is barely respected at all. It continues to respect at this line, but that's hell. I'm not gonna sit there and deal with all the swaps. I'm gonna wait for it to either finally respect this and get a new entry, or to come back, check this price and get a new entry if it rejects. So if it rejects, clearly no rejection here. If anything, it gives the sell side validation, which means that it sold underneath this price. It pulls back, respects it, and then rejects with nice volume. So there's an entry opportunity here. And it actually gives you a second one here. And then finally it takes off. Okay. All right. I think y'all are getting the point. This is how I want you to practice these. If you want to take liquidity being rated as a continuation or reversal, this is really just more summarizing what I did in the first lesson, where I was referencing that you let the market do what it does and you validate the trade based off what it tells you to do and the price action that it gives you, the trend that it gives you, the highs and lows, all that stuff. This is more detail of what I'm referencing. So hopefully this is clear and this helps some people that keep only taking one thing and keep losing on it and trying to force everything to be that. A lot of trades will actually validate both scenarios for you. You can definitely look at like a setup and see a buy and sell in all of them based off like what you're wanting to see. And sometimes you can even be on the right side of the trade and still be wrong, meaning like you just close it too early, you make a mistake or whichever. So you kind of have to accept that. But I hope this helps clarify that you're looking for validation. You know what I mean? Like when it comes back to this price and sells with this nice volume, this is way better. So I want you to look for in those turtle soups, those validation candles at that price. This one sold underneath here, pulled back. Once it rejected here with this candle, and that's telling me that it's not buy side, it's definitely wanting to sell side there. Stuff like that. All right. This for reversal to the sell side. This looks like a news candle right here, like some type of news because it sold down and then bought back almost immediately, it looks like, which is not really giving me a good, you could technically take a sell here, but you're going to get liquidated if you're trailing it at all because it never cleared this low, never respected that previous low, and actually just continues with the bullish trend. And then once it comes to the top side, it rejects with high price action. This is telling me over and over again buys. That's what it's showing me. This is the only strong bearish candle, and it was absorbed basically by the buyers. All right, so the better that you get at being able to look for validation or invalidation, you can take whatever the market gives you. All right. So don't get so attached to one thing that you're losing because of it. So I hope this was somewhat helpful. If you have more things on this topic that you want me to clarify, then please let me know. And if you want to learn from me on Slice app, post, that's the only place that I post analysis of what I'm looking at for the week. And feel free to find the link below. But I hope this is helpful. I hope I don't think I got too angry. I think I was pretty nice with it. So have a blessed day, and I will see y'all next time. Take care.